Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York on Thursday, the 29th day of May, 2014, and this is the Daily Report for Gold and Silver. Mixed bag in the precious metals with platinum trading higher, silver in essence trading unchanged, and both palladium and gold lower on the day. Currently, we have gold off about $2.70, call it $3, $12.55.44. We have a low of $12.50.60 and a high of $12.62.80. Silver has had quite a range today when you consider the low at $18.71, the high at $19.20, so we've got a 50-cent spread in terms of the trading range. That's a single candle on a daily chart. Currently tracking in essence unchanged on the day, trading at 19.01. More on silver towards the end of the show. There can be no doubt traders and investors are still reeling as we experience the dramatic sell-off that we got midweek. Of course, I believe that we really saw that coming, and not the direction that it broke to, but the fact that we would probably see some sort of a hard break, and that was based, of course, on this compression triangle. Now, we definitely got that break. Not only that, the day that we got the break, the market really stalled right around 1262 and has since really meandered lower. So the real question has got to be, where will this sell-off really terminate, or is this really the beginning of something much bigger in terms of lower pricing? Just got done doing our interview for Chart This. That, of course, will air tomorrow. We'll send you out a notification when that goes out. But that's really the question on most analysts, traders, and investors' mind in terms of gold, is where do we think the market could go? So in response to that, this is my sentiment and this is my feeling. The fact that we are currently trading below 1262 absolutely positively puts the ball into the court of the bears right now. There's no doubt about it. This market really has got to close at some point, whether it is tomorrow, Monday, or Tuesday, but it has to meander and form a base at 1262 if we are to see any kind of price stabilization in this area, because right now we're really, I believe, almost in no man's land, because we're sitting in between the 61 and 76% retracement. Now, if it cannot hold this area, the next real logical level that we think gold will probably go to is to test this 1232, 1229. Again, that is a 76% retracement, and that retracement is a short-term retracement because it is simply based upon the major rally we had end of last year, beginning of this year, in which we saw the market move from 1180 to just under 1400, so roughly a $200 move. 61% of that, of course, puts us at 1262. We dynamically broke below that and continue to trade below that as of this recording. Now, we are looking at a daily chart. I'm going to convert this into a 3 or 4 day chart so that you can see where this blue line comes from. We started on this discussion yesterday, and in essence, what we are looking at is historical references. In other words, if the market's ever traded at this level, how did it react at this level? Was it a support level? Was it a resistance level? And try to extrapolate some meaningful information due to that. Now, the one thing that we're noticing, first of all, on this daily chart, I've got a 14-day moving average, very, very short term. We are dynamically under it at this point. Where it was tracking just under it, it is now under it by roughly $30. The other thing that is quite evident when we look at this chart is the sideways trading activity that was really predominant through the end of April, mid-May, towards the end of May, until we got this dramatic price break, and that happened just a few days ago. Daily chart, you can see that 3 days ago. Since then, we have not really seen any kind of support come into the market. These last 2 trading days have really quieted down, very, very small bodied candles. However, they have had consistent lower lows and lower highs on the day, following this move. In other words, you could have expected to see, just based on some short covering in the market, maybe a little spike up and then a continuation of the downtrend. We're not even getting that. If anything, we're getting the market meandering lower at this point. So traders, as I said, I've converted this into a 3-day chart. Same chart, we've compressed it so we can take a look in terms of a timeline at some historical data. And as this market moved up, this of course is the beginning of 2010, the end of 2009 here. This of course is the beginning of 2010, and this of course is the beginning of 2011. So when we looked historically for this marketplace in terms of price activity right around this area, we really had to go back dramatically, because realize that when this market hit this 1930, end of, call it 2011 into 2012, and into the dramatic drop that we had, we really hadn't seen much of this price action right here. When we move back in time, there are a couple of areas that at least warrant our attention. Doesn't really mean it will amount to much, but I draw your attention to this top here. And so the market's trading, trying to get over $1,000. As you can see, $1,000 being a pretty critical mark. Let's go ahead and put that in. And so really the predominant factor through 2008 is ending here. So 2009 here is during 2009, the market comes up, hits 1,000, backs off, hits 1,000, backs off, and then it finally breaks through. And then as it breaks through, it forms this top here, and this top here is just at around, call it just above 1,200, somewhere around there. Comes back down, you get this retracement, and it's back to what, just below 1,100, and then you get these series of tops right in here. If we look at these series of tops and then we draw them forward, and that's the whole reason for this chart getting compressed. And now let's go ahead and expand it a little bit. Now that you know where that blue line comes from, you can see that the market had effectively, as of yesterday, closed, but closed just at that point. However, today it is currently trading under that point. And so where we saw this act as a resistive area before, let's go ahead and compress this chart again so we can kind of derive that information with that in mind. Once we saw the market genuinely trade there, you can see that it is, at least for now, matching up with this current top. Now, if we look historically also, the next real top in the market, if we move down, has got to be this top right in here. And if we carry this top over, I'm going to do it as best I can in terms of having a straight line across. We can see that we've already breached this area. These are this double bottom that we talked about. First bottom here. This is that second bottom here. So with that in mind, what we are looking at is as follows. If in fact the market can hold or meander back to 62, okay, we find some support there. If it does not, however, the next real level of short term, and the reason I'm saying short term is it's based on a very, very short term fib that has to do with this last rally, is 76. However, the key is that if it continues to break below this line right in here signifies a pretty major resistance area back in 2010 and 11, and that area is going to become resistance again. If that does, we've got this as our next level, 1231, but then below that, our real level is the recent double bottom. That would be the maximum, because this is the second time it hit that. We had it once before, but it is, in terms of a historical reference point, an area in which we've seen this market, as the market was moving up, of course, find some difficulty going past it, dips back below, and then moves up. This next level here really correlates just above this double bottom. So what are we looking for? Well, as of right now, we have to believe that the pressure right now is to the downside. Has it caused any major chart damage? Well, we can absolutely say we're at that critical point, because if we continue to to track below the 61% retracement level, it really negates any kind of bullish model that we might have right in here. And the fact that we had this double bottom is great, but the fact that the market really has had these series of lower highs and then most recently higher lows to form that compression triangle, it breaks back to the downside, has got to put the bears in terms of their camp in absolute control of the price of gold. So again, where do we think this market could drop to if it does continue to drop? And right now, that is kind of what we're seeing. First of all, if you recall, we talked about the double harmonics that we had at this level. This is the 1295, 1292 band. The next real level that comes in is a 50% retracement right here at 1229. That also corresponds to a 76% retracement level of just this move right in here. From here down to here would be a 76% retracement of this move. In terms of the bigger picture, that number comes in on subsequent charts. So that is really the level that I believe we could see gold track to. So how does that correspond to silver? Well, rightfully so, I've been bearish on silver. Wrongfully, I've been believing that we had the potential for a upside breakout in gold. I was correct that we were going to get the breakout. Absolutely 100% wrong in the direction that breakout occurred. However, when we look at silver, you can see that even though it's unchanged, it's closing near these series of lows that we have had. That's our current resistance. Our current resistance right now is just above 1900. And in terms of major support, we don't really get that if you consider the lows today at around 60. That is a 80, that is a low that we really haven't seen. Go back historically, we saw at one point, this is the daily chart again, at one point in May, but since then, we hadn't seen that kind of a low at all throughout this entire year. So we're really in a very, very nebulous area in terms of silver, technically speaking. And if it cannot hold this level, it's going to have to test the mid $18 per ounce level. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.